Hello Africa, welcome to Investments for Impact, a Villgro Africa podcast. In this season, we are focused on the topic of fundraising. We welcome you to our fourth episode where we discuss angel investing as a source of funding for startups. Thank you for joining us. Mr. Steve Gugu, welcome to the Villgro Africa Investing in Impact podcast.
Thank you for having me.
It's a great pleasure to meet you. I've always wanted to meet you.
Well, thank you for inviting me. And I've enjoyed just the chat that we've had, just getting to know each other much better.
Wonderful.
Yeah.
Now, you wear many hats.
Yeah.
And I would like you to introduce yourself and probably, cover some of the hats that you wear as you do.
Okay. For today's purpose, I'll say I wear 4 hats. One, I'm a dad and I'm married.
Yeah.
So I have 4 beautiful young daughters and 1 beautiful wife.
Wow, congratulations.
Thank you.
Yeah.
But then on the professional side, I wear a couple of hats. The first one is, I think, what we're going to be speaking about today, which is on the angel investing side of things, where I'm an angel investor. And as Viktoria, one of the institutions that I'm affiliated with, we put together an angel network called Viktoria Business Angels Network, which makes investments into early stage companies. So far we've done now I think 15 angel deals.
Wow.
That's the ones we've syndicated. Our angels have done in excess of 30 deals by themselves. And on top of that, I think we've deployed just about $1 million through our angel network on the different deals that we've been involved in. So that's one of the other hats I wear. But apart from that, Victoria then does stuff with entrepreneurs around the access to finance space. So that's programmatic work. We're running a program called R2C, Research Commercialization, which we're supporting research and moving it to commercialization, and several other programs, and a bit of advisory work. The other hat I wear is more or less for mature businesses. So I am a principal at a company called Investia Africa Limited. And there we do proper project and corporate finance advisory. So really, you can imagine if you're trying to sell a business, if you're trying to buy a business, if you're trying to raise at least $3 million for a corporate, an SME, a project, we'll support in terms of that process. And the last hat I wear is on the academia side of things. So I teach at Strathmore and Lagos Business School. I'm an adjunct faculty within the area of entrepreneurship and finance, so entrepreneurial finance. So at Strathmore, I run a program called the Private Equity and Venture Capital. So how I try to merge all the different hats is that it's really, I operate in the continuum of finance.
Okay.
So from the early stage all the way to the later stages. And everything I do is touching on entrepreneurs. They could be either running a company or doing a project. And then I look then to support them in the journey of being able to interact with investors on the other side, or I'm working with investors who are trying to invest into startups, or into startups or companies. So it's the same work. It's only that it's on different stages. And I'm very fortunate that I have a team that supports in all this, so I don't do it by myself. So under Victoria, we have a team that works on that, and at University we have a team. And of course, when I'm teaching, I'm very much a part-time adjunct faculty. Yeah.
Wow. Thank you for that introduction. And you actually, as I was telling you earlier, we just had to have you for this podcast. It wouldn't have been complete without Steve Gugu here. So today's topic is angel investing, which, as you've said in your introduction, is core to the work that you do. And just to get us started, what's angel investing? Without, assuming that people do know, let's just get to the basics. What's angel investing?
Yeah, good question. So angel investing at the end of the day is just people putting their own cash, investing their own cash, mostly it could be equity, could be debt, into early stage companies. Right. The moment you do that, you're an angel investing. You're doing angel investing. Now, the difference that exists, because there's also family and friends, is if we are related family and friends, in this case, or we're friends, I invest mostly out of the relationship that we have. Or the relationship is a very critical bit. But an angel investor is not investing because of the personal relationship. They would know you, of course, they would want to invest in you because of who you are and because they like what you're doing, they like the kind of founder you are, but they're really evaluating you from a commercial perspective. Right? But they've chosen to make investment into you as a startup founder and so forth. And there's 3 attributes that distinguish who an angel investor is. The first one is the fact that they're putting in their capital. And this is in an early stage company. The second thing is that they're also putting some mentorship on top of that, or coaching. Right? So they will work with you after that They will coach you from a business perspective in terms of some of the challenges. So the assumption here being that they have a bit of business experience, work experience, entrepreneurship experience, that they can be able to work with you, then to support you. And the last thing they'll do is their contacts, the 3 C's.
All right.
Capital, contacts, and coaching, so to say. Yeah. So they'll open up their contacts.
Yeah.
And the whole idea here then is, if you're a budding entrepreneur, getting, meetings can be a bit difficult for you. So then they'll support in terms of that. And so if I look at some of the startups we invested in, we've introduced them to, people they can do business with. We introduce them to different investors. And that's because then the angel investors have a bit more networks that they can be able to work with.
Wow, great. And how long has angel investing been around in Kenya and in Africa?
Yeah. So that's a tricky question because remember what I started by saying, the definition, right? When you're making the investment and you're not doing it purely just out of the relationship, you're already an angel investor.
Yeah.
So I think the terminology came to define, but I think people have been doing angel investing for time immemorial, right? Because even as I was growing up, I would see, my uncles and so forth who would say they're going to pitch someone, they want to get maybe to open a restaurant, right? And someone would put in some cash in this case, and they would follow through on that. But I guess if you take it from the perspective, the formal perspective, where people add those 3 items, the coaching element, the capital element, and the networks, right, or the contacts, then you could say that, for trying to formalize it is something which has come a bit later. So if you look at the continent, the initial angel groups were created around sort of like the 2000s. And that's Lagos Angels Network and Cairo Angels. Those are sort of like the pioneering angel investor networks. So they were created around that time. If I look at what we have in Kenya, I would say for us, I think we're probably the first angel networks to come out and say we're an angel network and we're making investments and actually follow through and make investments. There are other angel networks which had been put before, which had been incorporated, but probably they're not doing as many deals. We were established back in 2016. Took quite a bit of time to figure out what's, how we were going to structure ourselves from a business model perspective, but eventually then was able to do that. So I would say, in Kenya, going back to where the tech ecosystem sort of like started, if sort of like we want to focus it on technology, I would say probably you're talking about maybe the 2012s going forward all the way till to date.
So just about 10 years.
Yeah, is that 10 years? 2012 to, I would say probably 10 years plus.
Yeah.
But remember, I said from a definition perspective, because people have always been doing angel investing. It's just that they've not defined it as such.
Yeah.
And probably they've not put as much emphasis on the 3 C's I spoke to at the beginning.
Okay. Perhaps also maybe going into the distinctions, how does angel investing differ from, say, venture capital investments?
Yeah. Good question. So a couple of things. So the first thing is that VCs don't invest their money. If I'm working in a fund, I've gone out, I've raised money from family offices, pension funds, whoever it might be. I'm investing money on their behalf.
Yes.
As an angel investor, I'm investing my own cash. Right. So if the money gets lost, it's my money. Right. As a VC, if you lose the money, you can say it's not your money to that extent.
Yeah.
And that you'll see it even in terms of the process that a VC follows.
Yeah.
They're very strict in terms of the process. They're very formalized in terms of how they deal with you. They tell you we have an IC meeting coming up and so forth.
Yeah.
For angel investors, especially if they're not working in a group, you could meet with someone for coffee. And after the coffee, they wire you the money. It could be just as simple as that.
Yeah.
So I think that's probably one of the key differences. The other aspect is that the angel investor, remember what I mentioned, they're adding those 3 C's and they're doing it as themselves.
Yeah.
Right? So they tend to be less informal. So if I look at some of the startups we've invested in, how we try to add value at times is not sort of like sitting in the board. It's that we have coffees. Right?
Yes.
We have coffees. We'll have a coffee. We'll discuss this, what's happening. We'll try and sort it out. We will have the newsletters that they'll share. We'll look at those newsletters. We'll try and support them through those newsletters where they indicate what the challenges they're facing and so forth. If you look at VC traditionally, they want to have the formal board meeting to sort of like get the information, or you have to submit certain pieces of information and so forth. So that's another probably key difference. And then I would say probably from an amount perspective.
Okay.
VCs tend to be much bigger,
Yeah.
depending, of course, on the kind of venture funds. Now we also have micro VCs
Yeah.
that make, maybe they are $1 million, $2 million. So they come and, they're competing with angels, or they're investing with angels. I should probably put it that way. But generally, you expect them to have much bigger ticket sizes. So they would have no problem doing an investment of, I don't know, $500,000, $250,000. If you look at angels, and there's some research has been done by the Africa Business Angels Network last year, together with Brighter Bridges and the Africa Angel Academy. One of the pieces that came out of that is that most of the angels invest, their ticket size are below $10,000.
Okay.
Yeah. So, and of course they'll syndicate, of course, to raise a much bigger pool, but they're not investing as much money as a VC. So I'd say probably those are some key differences.
Okay, great.
Yeah.
You introduced some jargon. For the sake of our audience, what's syndication?
Yeah. So syndication is, as an angel investor, if you come and to raise money, you may say, I want to raise $100,000 or, I don't know, $500,000 for argument's sake. I can't afford that, at least not yet. And so then what I will do is that we'll go back to our angel group, where we have now over 50 angel investors, and we'll put you in front of them to pitch.
Okay.
And each of them is going to be listening in. And then out of that, probably 5 people will say, we're interested in that deal. So I'll say I'm putting in 10,000, someone else is putting 20,000, someone else is putting 50,000, etc. We'll put that money together into a pot.
Okay.
So that pot then probably is $100,000, and we'll say that's what we want to invest. Yeah. That whole process I'm talking about is syndication, where an angel then is investing within a group. And so typically what will happen is that they may end up incorporating a special purpose vehicle or a company that they'll use for making that investment. And so when you're dealing with them as an entrepreneur, you're dealing with one entity. So you're not getting midnight calls from Gugu, afternoon calls from someone else.
Yes.
You're dealing with one entity.
Okay.
And so to that extent, it helps in terms of that formalization.
Okay.
And then also from the perspective of your cap table, the list of the shareholders that you have.
Yes.
You don't have 100 people.
You want a
over
clean
time.
cap
You want
table.
a clean cap table, because then when you want to make certain decisions and you need to get approvals from shareholders,
Yes.
you don't want to have to call 100 people. So in this case, because you have different syndicates, you can just speak to the lead of the syndicate, and then that lead will discuss with the other angels in the group. Then the decision will be made from that perspective.
Okay, great. So you said angels invest their own money.
Yes.
Must be very risky.
Well, it is. I'm trying to think of how to put it. It is and it's not.
Okay.
Right? But generally it is.
Have you lost money?
I have lost money. Actually, there's some deals that I don't like talking about, but I have lost money.
Okay.
So there's a few things. And here I'll sort of introduce the aspect of education for angel investors. If you're investing your money and you have no prior education just to understand the asset class, right? It can be extremely risky.
Okay.
Right? If you have a prior education about it, you can be able to reduce the risk to a certain extent.
Yeah.
Right? And so why is it risky? So what research says is that if today we invested in 10 startups, by, I think, depending on the sectors, of course, by the third year, we expect that probably only 7 of them are operational. By the 5th year, I think it's something like only 3 are operational. And they say by the 10th year, 1 or 2 are operational.
Yeah.
Right? And so if you're going to be investing then at the early stage, you don't know which of the 10 companies is going to make it. So it just comes with the game in the sense that you'll end up losing some of those startups. Now, how do you try to de-risk?
Yes.
Is number one, you try and think about how much money you're investing. Right? So if you have, for instance, let's say, assume I have $500,000 to invest.
Yeah.
I'm not going to put that in one startup. I'll put that in different startups.
Okay.
Yeah. And so in so doing, what I'm doing is that I'm increasing my portfolio size. Right? And the rule is that if you get to at least 20, you've pretty much de-risked, because you're in different sectors, you're in different stages, you've invested in different founders, you've invested different amounts with different people who have different levels of experience. And that helps in terms of being able to de-risk it to a certain extent. Right? And so then the advice, and that's why I started by saying, if you have no prior training on angel investing, it's good to get it.
Yes.
Some people just imagine it's like investing in the stock exchange. You see, the good thing about investing in the stock exchange is that I'll never lose my money, quote unquote.
Yes.
Right? I mean, it's next to impossible.
Yeah.
Right? If I invest in Safaricom today, Safaricom is going to be there 10 years, 15 years from today, ideally. Right? And with a certain level of certainty.
Yes.
But if I invest in Moses company, Moses Fintech Limited, who knows whether it's going to be there?
Yes.
Yeah.
Okay, wonderful. That's quite interesting. Now, in terms of criteria, what are you looking for as an angel investor? And as an entrepreneur, how should I prepare to come and meet you?
Yeah. So, as indicated, angels invest on the early stages, right? And so, to that extent, at times there's not so much to look for, right, or to look at, because you can't say I want 5 years audited financial statements. So, really, you're first of all looking at the founder, and you're asking yourself a few questions around the founder. You're asking the founding team, not just the founder, but the founding team. What's their level of experience in the space that they're in? So if you come and tell me you want to do something in the medtech space, right? So I want to find out, do you understand healthcare? Health tech, sorry. Do you understand healthcare in this case? If you don't, who in your team understands healthcare? Do you have a technology expert who understands that, right? So I want to find out some of those things. Have you been a previous founder in a different startup? Were you working for the largest startup in healthcare? And then you moved and you founded your own company.
Or
so I want to figure out some of
corporate.
those things, right? Even corporate, even corporate, because that's when then you create your networks. You get to understand the problems really well. And so as you're coming back, then you're trying to address some of those challenges. So I'm trying to ask myself some of those questions around that founding team. And we usually say that you're trying to look for a founding team that is balanced, where they have someone who's very good from the technical perspective. You have someone who's really good from a capital raising perspective. So they can tell the story, they can look to raise money, etc., etc. And you're also trying to get someone who's very good from, we call it the hustle, right? These are the guys who just get stuff done.
Yes.
Those people who, whenever you have a problem, you call them and they know how to sort of like figure it out and so forth. And these are the guys who just keep things going. Street smart. They keep things going irrespective of how difficult things are. So you're trying to get that kind of combination at the end of the day, right? So that's one thing. The other thing is that since, and I mentioned it's the early stages, you're trying to look also at the market.
Yes.
Right. So where are you playing? How big is that market space? And I like telling people that the good thing of a big market, and that's why you need to size your market as an entrepreneur, is that assuming we say that our total market size is $100 million or $1 billion, right? In a market that's $1 billion, even if we choose to pivot, there's billions of ways to pivot, and we're still within the market, right? But if you have a smaller market, at times when you're trying to pivot, you may have to pivot out of the market, and then you have to learn. You're having to learn new things. Right, so that's such an important thing, just to have a big market, and here you're also asking yourself certain things about the market. What's the timing? There's so many people. I remember when we started talking about angel investing and working with startups in Kenya. There's a time we used to say that the total number of smartphones in Kenya were 200,000 smartphones. So if you're then creating an app, then we knew that from a distribution perspective, your market was capped to a certain extent, to that 200K. Right now, of course, smartphones are ubiquitous. Most people have them. So, the timing is very different in this case. And that's why then I feel even in the continent, things have really heated up on the tech side of things, because now you have more people. And then you have to think about even the payments, right? We joke about it. Like if you look at what happens in Kenya, we have M-Pesa. And it's very easy for you to start a platform, an e-commerce platform, and, you'll get your money. You can send a rider who will deliver the thing, you'll get your money on M-Pesa and so forth. There's certain markets where that does not exist, right? Just Ethiopia, Safaricom now is in that market and they're trying to really push the mobile money side of things. But if you don't have some of those infrastructure, it just slows you down. So we're trying to understand the market, the timing of the market, whether it's the right time for you to be able to scale and so forth, the speed of growth of the market that you're looking at, the level of sophistication and so forth. So those two are probably the key points. But then the other things that an angel looks for is they also look at the deal metrics. And I like saying this a lot, that a good business is not necessarily a good investment. You have businesses which are good businesses in that they're going to be profitable and so forth. But if you invest at the wrong terms, you'll never make money out of them. And so if you're an angel investor who's looking to make financial return, then you have to really think about the deal metrics, right? Then there's aspects around competitive advantage. Do you have a certain level of competitive advantage in terms of if you compare yourself to other startups in that space or other companies, right? And so as a startup, some of the advantages you have is that you can move much faster. In this case, you can make things a bit cheaper because you don't have necessarily the brick and mortar that a traditional business tends to have. So some of those things are also very important. But the two key factors is always the market and, of course, the team that you're looking at in this case. Scalability is also important and so forth.
I really like what you said, that a good business is not necessarily a good investment. It can be a good business and you could make a bad investment. Wonderful. Now, I'm curious to find out from you, what are the specific challenges of being an angel investor in Africa? Because angel investing has been around for a while, but you told us earlier that in terms of the formal angel investing, we're talking about just maybe 10 years. What's unique about investing as an angel in Africa?
So in terms of challenges, there's a couple of them, right? I would say probably some of the ones I think about is we need, and I'll start from macro, if you look at our governments and how much they recognize angel investing and how much they support angel investing, that apart from now that we have a couple of startup bills which have started coming up, which are very pro angel investing. What I mean by is this, number one, I'm taking risk. Right?
Yes.
Ideally, what should happen is that the government should have a pool of cash, right, which should be invested into these early stage companies to de-risk them. And then we should all participate once they're de-risked. But most angel will start even at times from the idea stage to be able to move with these. But then as they're taking this risk, if you look at developed economies, some of the developed economies like in the West, the UK, Spain, the US, etc., there's certain breaks that they're given, an angel investor is given. Some of them are such that if you invest a certain amount of money, that amount of money you can deduct from your tax returns for that year, meaning that it reduces your tax obligation. Right? You also have fast loss funds, which co-invest in you, and in the event that there's a loss, it takes the initial loss, and you only then suffer any losses after that fund has suffered a loss. So meaning that if a startup you invested in had to liquidate at a lower price, you would still get your money to a certain extent. Some of those things are very useful, right? And I think they affect the speed from a challenge for angel investors within the continent. Another thing I would just say is pipeline, good quality pipeline. Right. I think people, there's so many startups, but at times, you're looking for that right startup that's going to scale with the right founding team, etc., all those different things I'm talking about. And at times, when you're wearing a founder's hat, you're just like, seriously? But there's so many companies that you can invest in. But if then you're trying to sort of like find that right startup, you find that getting a good mix of founders who, first of all, have the right level of tenacity, because angel, startup investing is difficult. I run my own company, and so I'm not exactly a founder from that perspective, but I've gone through it. I know how difficult it can get. So the right level of tenacity, getting founders who also have the right kind of vision. That when they're looking at their business, they're not looking at just a Kenyan business. They're country specific. They're looking at maybe going across the continent. At times, going even to the West and conquering that market. That level of ambition and so forth. Right, getting those at times is not as easy as people imagine. Right, of course, there's so many businesses that want to raise money, but getting those right ones at times can be a bit difficult. So I would say that's probably another challenge. Then I would say just, and this is not maybe for angel investors per se, it's also for the startups. If startups want to scale across the continent, it's not as easy. Right. And so while on the one side you're telling startups, you guys have to really scale and everything, you also realize that you have a startup and you're based out of, I'll just pick a country, Botswana. Right. For you to be truly, give angels a really good return, you have to think about scaling. But, from a scaling perspective, there's exchange rate issues, there's political issues in terms of sort of like the countries that you're looking at. So those tend to be also challenges for startups, and then they transfer to angels, because as you're looking for that startup that you want to invest in, you realize that it's not as easy, so to say. And I would say this other one other challenge I've seen is that now we have micro VCs that are crowding out angels. We've gone for deals where we thought we were going to get in, and angels at times can take a bit of time to make up their mind, especially when they're investing within a syndicate. Right. And so you end up, as you're waiting, a VC comes, better terms, and you're off the deal. So to say, or the founder just calls and tells you, sorry, this is what happened. So those are some challenges that I would highlight.
What about data? Is it an issue?
It is. It is a big issue, right?
How does it impact you, and how does it differ in other markets?
So, data is a big issue from the perspective of, number one, trying to size the market. For a startup, it's very hard at times to understand, just how big a market is, because how much are people going to spend for a specific product, So just being able to get that kind of data to analyze a market really well and to understand it, that's a bit challenging. At times, even transactions data. At times you want to, a startup is coming to found. They're trying to raise funding.
Yeah.
They want to figure out what their valuation is going to be, what terms they're going to give, and you have such a disparity because the kind of statistics they're looking at and the statistics you're looking at are very different in this case. I guess you asked, how do angels then try to bridge that gap?
Yes.
The good thing is that now we've started having a bit of data on transactions. I mean, there's good platforms like Disrupt Africa, Brighter Bridges, Africa, The Big Deal, that are putting out quite a bit of information. So that's supporting in terms of just getting transaction-related data.
Yeah.
In terms of market sizing kind of data, you have to get comfortable with making a lot of estimations, right? And I like what one of our angels says, you're not trying to get to the exact market size. What you're trying to ensure is that you don't estimate the market at 2x what it is, right? And so if you go in with that perspective, where you're just trying to just get a good sense of what the market size would be, then there's a bit of data that you can be able to rely on by just making certain guesstimations in this case.
So, Steve, now, wearing an entrepreneur's hat, because you did say that you have been an entrepreneur yourself, what would you say are the challenges that entrepreneurs encounter when trying to find angel investment?
Yeah, I should add this before I even move there. Angel investors, quite a number of angel investors have been entrepreneurs also,
yes,
right? So they understand some of the pains that entrepreneurs go for, right?
Yeah.
But I would say the first key one is we just don't have enough angel investors.
Okay.
Yeah, we need more angel investors. We need more people in the continent who are looking to back younger companies, and not only just give them funding, but support them with the 3 C's I spoke about.
Yes.
Open your networks, coach the entrepreneur, and work with them through that. So we just need more of those, more angel groups. Like in Nairobi, we speak about NIBAN and VBAN in this case. There's several other groups, investment groups that make investments, but some of them have not come out and said we're an angel network. So if you're trying to look then for some of these groups, it's a bit difficult for you to find them.
Okay.
So I would say we need more. And I should add this point that the continent is not the same. People speak about Africa,
the dark continent.
In fact, for me, the challenge that I speak about is that the experience you have as a founder in Lagos, in Cape Town, in Nairobi, in Cairo, is different from the one you're going to have if you're in Kigali, you're in Harare, you're in Lusaka, right? And that's because those ecosystems are not developed to the same level.
I get it. Yeah.
If you look at the total funding that is raised in the continent, almost 50% goes to just for those first 4 countries I spoke about.
Yes.
Right. And so we need more angel groups. Even the angel activity is very active in those markets and not as active in the other markets that we're talking about. So I think that's the first thing. We need more angel groups. We need more angel investors.
Yeah.
The other thing that you'll face, I think, as a founder is the idea that most angels are also risk averse compared to their counterparts in the West, so to say, right?
Yeah.
So I know there's founders who want to find an angel who they'll meet for coffee and they'll wire the cash immediately, and I've heard those stories.
Yes.
Where people tell you in the West, they just had a coffee with someone.
Yes.
They said, I love what you're doing. I'll wire you the cash. Then send me the documentation.
Yes.
That doesn't happen.
It happens only in San Francisco.
Doesn't happen in this market.
Yeah.
Of course, over time, then there's a certain level of sophistication that is coming in, and there's more angels who are coming in who are able to do some of those things. But it's not that's not the experience many founders will tell you about. In fact, I don't know of any founders who've given me that kind of experience. And so that basically means that as a founder, then you have to have a bit more traction before then an angel investor would be willing to look at you and say, I'm going to make an investment. And that's not all the angels, but that's most of the angel investors, so to say. The other thing that you'll find is because of the lack of training or education, formal education for angel investing, right?
Yes.
Because all angels, of course, they have their own experiences. They've been making investments in various sectors, traditional sectors, real estate, stock markets, and so forth. They have all that. But when you're investing in a startup, it's different. And it's different because you can't come to a startup and you're putting in the first $100,000 or $200,000 and you own 50% equity stake.
Yeah.
Right. If you start from that point, then by the time the entrepreneur is doing their third round, fourth round of investing, they've been diluted to nothing and they're not interested in running the startup. And that's just one of the terms, right?
Yes.
And so then you find that the expectations gap between the angel investor and the founder at times can be very far apart. Where at times you're better off, just telling that angel, I'm not interested in this transaction. I'll go through maybe the formal angel groups, which are do a bit of work in terms of training their angel investors, and so then you're speaking the same kind of language.
Yeah.
So I think that's another key challenge you'll find as a startup. And then these are others that I've seen where at times, especially when the group is not very formalized, they'll take a bit of time to make to make their decision from an investment perspective. You might find as though you start a transaction and it's just taking too long before you get the final decision as to whether they're moving ahead.
Yeah.
I mean, from our side, we sort of like have an SLA where we try to make sure that if it's a no, we give you the no immediately.
Yes.
We don't waste your time, right? And if it's a yes, we tell you it's a yes, but these are the following conditions that we have to go through, and it's a conditional yes at the end of the day. So those are some challenges that you might encounter when you're dealing with angel investors as an entrepreneur.
Okay. Yeah. What about awareness? In your opinion, would you say that entrepreneurs are generally aware that angels exist and also are able to find them?
Yeah. I think now it's getting better.
Okay.
Right? It's getting better because we have the Africa Business Angels Network, which has a list of all angel networks. Okay. And they can, if you reach out to them, they can also make an introduction to specific angel groups. You also have incubators, and it's an ecosystem, right? The incubators will tell you these are some angel groups that you can reach out to and so forth. So that is helping. But I remember what I mentioned, that the experience you have when you're in Nairobi or Cape Town is not the same experience that you'll have in some of the other cities that we have in the continent.
Yes.
So I would imagine that in some ecosystem it's worse than, you have entrepreneurs who also do not know where the angels are because they've not stood out and said we are angel investors who are looking to make investments.
Okay. So you spoke of the fact that we need more angels. And I'm curious, even though our audience is startups, speaking perhaps to potential angels, how would you make the case for angel investment versus, for instance, construction, particularly in a place like Kenya where people really just think brick and mortar, flats.
Yeah. So let me start from the money side, so the money side is this. There's angels who are in a transaction, Paystack, which is one of the Nigerian startups that was acquired by Stripe. Yeah. Right? Acquired for $200 million. There's people who ended up making like 40 times the initial investment.
Wow.
Yeah. For context, if you had invested $10,000, you got $400,000.
Wow.
Yeah. So when you get it right,
yes.
In fact, they say that for angels, at times you only have to get very few deals right.
Yeah.
And they'll cover all the rest, right?
Wow.
And if you look at where our market is, and especially, if you're a Kenyan, for argument's sake, if you look at some of the startups that are raising money, I pinch myself. Some of the startups that have raised significant sums of money, I saw them.
Yes.
But at that point, probably I didn't have as much cash.
Yeah.
Like, Wasoko, for argument's sake.
Yes.
Which did around, I think, at $600 million.
Yes.
I remember when they pitched to us.
Yes.
Right? And so when I look back, I'm just like, I should have just taken a punt and just put a small amount of cash. So there's a return conversation.
Yes.
Right? That when, real estate will never give you 40 times your money.
Yeah.
I don't know what kind of real estate you'd have to be doing to get that kind of return. But over and above, so like the return equation, which comes with its own risks. So don't get me wrong. I'm not saying that everybody makes those returns.
Yes.
I'm not yet there. I think the other aspects around is that with angel investing, first of all, and I should mention this, we're not telling you to invest 100% of your portfolio.
Yes.
Right? You need to create a portfolio. So assuming your total investment to capital is 100 bob. Then what we're saying is that what you should allocate for angel is 5 to 10%.
Okay.
Right? This is money that you can lose and everything will still keep moving.
Yeah.
Right? But if it makes a good return, it can be substantially bigger in your total portfolio at the end of the day. Yeah, and so that's one of the things that I always tell people, that when they tell me it's too risky, it's too what, I tell them, you know what, you're taking 5 to 10%, and that's what you're investing, and that's money you can afford to lose. You should only invest money that you can afford to lose. But going forward, there's so much impact that you have around angel investing. Yeah, supporting entrepreneurs who are trying to solve real problems. Right?
Yes.
You know, and I can just speak about some of the startups. We invested in a startup out of Egypt called Rology.
Yes.
And what they're trying to do is that they're trying to what's the best way of putting this? To create an Uber for your radiology department.
Yes.
Where you don't have to have all the radiologists and so forth. The images are taken, they're uploaded. You have radiologists from across the world who will review these and submit the report to the hospital. Now, if you look at what's the impact for these, there's some hospitals that cannot afford to have a radiologist.
Yes.
But yet they still need to treat patients. So how do they do this? Yeah, this is a startup that's trying to empower, the hospitals, and so by solving this problem and addressing. If you speak about e-learning, there's people who are doing e-learning to support kids who would never be able to get the same quality of education because they would never be able to hire that quality of teacher.
Yeah. But
because of what they've been able to do, they're addressing challenges. So those kind of things, I think, and addressing the challenges at scale, right? Not just where we are at scale. So I think as an angel investor, you get the opportunity to participate in some of these rides, right?
Yes.
And they're able to sort of like, you see sort of like how they scale and how the kind of impact they're able to sort of like make. And that for me, as an African who sees all the challenges we have in the continent, is an active way of participating to solve those problems, while you're also looking to get some financial return.
Yes.
That's another, for me, case. The other case for me that I like is that you learn every single day.
Yes.
Founders teach you a lot. You listen to startup pitches just over an afternoon. You're just like, wow, there's some problems you didn't even know existed that are being solved. Right? Wow. And you learn so much from the founders and so forth. And if you have a network that you've created because maybe you've been around for, I don't know how long you've been working and so forth, what's the best way of activating your network is to use it.
Yes.
Right? And so the startups also give you this ability to call someone and tell them, hey, I have this startup that's doing 1, 2, 3. Can you have a meeting? And I love problem solving, and that's problem solving, right?
Yeah.
You're doing it. You're enjoying doing that, and yet you're having quite a bit of impact in someone else's life. They're solving a real problem. Yeah. So it is fascinating. It can get addictive.
Yes. It's clear that you're very passionate about it, and I think we definitely need more angel investors, and as passionate as you are. Now, you spoke about Rology. By the way, we have done some work with Rology here at Villgro Africa. So it's great to know that you supported them early on in their journey. Now, I'm curious to find out about sectors, because Rology is in the health sector. Are there sectors that you would say, from your experience, that are better than others? Or from a pipeline point of view, do you see certain sectors being more active than others?
So I think for angels, let me start by saying, for angels, they invest in what they like, what they understand. Right?
Good.
So then really you can't put angels into boxes. I've invested in Bimo, that's in the logistics space. I've invested in a company called Safi Power. It's an energy space. So like the interest can be very varied from that perspective. So angels are not in boxes. But then if you look at the pool of capital from a macro perspective and ask yourself, where is the pool of capital going? I think in the continent, fintech controls almost 50% of the amount that has been deployed, right? And so then angel groups being part of this ecosystem would also make those kinds of investments in some of those sectors. So logistics is a big one that a lot of money has gone into that. Now the interest sectors, there's a lot of interest in agri-tech, health tech, ed tech. Those are picking up quite a bit. So to that extent, I would start by saying that you can't put angels into groups. Into categories and say this is the place that they should invest in. You invest in what you like, what you understand at the end of the day. And that's the beauty of angel investing also. You see, as a VC, if you've raised a fund to invest in health tech or in healthcare, you can't be investing in someone doing logistics, someone doing fintech, unless it's very related to what you're doing. But an angel investor, you can be that eclectic. You can invest in an agri-based solution. You can invest in what? So it also exposes you to that
But doesn't it make sense to have a thesis still as a angel investor?
I mean, there are those who have a thesis,
Yeah.
and they say that they're focused on these sectors only. But then there's those who also don't have a thesis, because also you're creating a portfolio that you need to be balanced.
Okay.
And also you're trying to have cross relationship between the different startups. Right? So if you have a fintech that can provide a solution to your agri-tech startup, you link them up. If you have this, so it does. And when you speak about angel investing, that's some of the things that under strategy. Right? What's your strategy? One of the key questions is: do you want to focus on specific sectors?
Yeah.
Do you want to focus on specific, levels in terms of is it early stage, very early stage, is it idea stage, and so forth? Those are questions you should ask yourself. But I know people who are very, they're very interested in anything. Like we have members of our angel network who listen to all the pitches and they'll deal with them when they come in. They say, okay, I like this deal.
Yeah.
There's someone else I know who understands that. So since they understand it much better than I do, I can follow them in that transaction and move with that deal.
Okay.
Yeah.
So for, again, the entrepreneur, and I keep saying this because that's our audience.
Yeah.
If I'm coming to speak to you as an angel investor, is there anything I need to do different compared to if I was going to speak to a VC?
I really thought about this question because at least, you see, I'm evaluating you from a commercial perspective.
Yes.
Right? The same way a VC would evaluate you from a commercial perspective. I'm probably less formal in terms of how I do things compared to what a VC would do. My due diligence process, it's not 5 steps, so to say, though I'll still do my due diligence.
Yes.
Right? So to that extent, there's quite a bit of similarity. To that extent, though I would say specifically for angel investors, just because of their level of formality, it's good to really understand who are the angels.
Okay.
What's their background? What have they invested
as individuals?
in? As individuals,
yeah.
And also what have they invested in? If it's a group, what do they like investing in, and so forth. I think that helps a lot because then you know how to pitch your solution to them. In this case, what stages do they invest in, and so forth. It's good to understand the angels or the angel that you're dealing with very well, so that then your pitch is at the right level for that angel investor, right? So I'd say, and I don't think it's any different that you do that than you would if you're sort of like dealing with a VC, but I think it's a very important thing. What else do I think you should do differently? I think, these are individuals, they make their decision and they decide. So just be very respectful to them, be humble, sort of like talking to them. And even if it doesn't work out, that's a funny thing. There's some people who are members of our angel network that probably I'm seen as a face, but they probably make bigger deals and much more deals than I do.
Yes.
Right? And so when you're dealing with an angel, don't assume just because it's an individual that it's like this one cannot make this investment.
Yeah.
Like just treat angels the same way with a certain level of formality and so forth, because you never know.
Yeah.
And also with angels, like there's connections, right?
Yes.
That we bring to the table. So at times you could come ask for money and say, I can't invest, but I'll invest with this person. I'll introduce you to this person who gives you business that's even better than getting cash. So I think just treating angels with that level of decorum. Because at times it's entrepreneurs who sort of like look at you, they're just like, can you really invest?
Yeah.
And they don't know that it's not just about me, it's also about the people in my group, in my network, etc.
What about the role of relationships in angel investing versus like VC investing? Now, given that this is personal money, does that come with any sort of attachments or expectations from the angel?
Yeah, chemistry is definitely one thing that should work on, and that's why I speak. Understand the angels really well. But remember that we also evaluate from a commercial perspective.
It's
like
business.
I could like you,
but
I will not invest if I don't think it's a business, right?
Yes.
And that's why I say it's different from family, friends.
Yes.
Right? Because those ones, they could look at the business, it's not making sense, but it's like, what? It's okay. I'll still invest because. Let's just see what's going to happen. But angels
promote.
But for angels, it's different from that perspective.
Yeah.
It's still a commercial sort of like discussion.
Okay.
It's just that the relationship also helps a lot at the end of the day.
As we come towards a conclusion, I'd like you to suggest to us what role other ecosystem actors could play to promote angel investing. And in fact, as you consider the answer to that question, I'll tell you a short story. Years ago, as a student, I wrote a paper on angel investing, and it was rejected in a higher learning institution in this country. And the reason was because the lecturer just didn't understand it. So they asked me to change my topic and research on something else. So thinking of academia, thinking of incubators, government, what would you say other actors need to do to promote angel investing in Kenya, in Africa?
Yeah. So first of all, I'm not surprised that your paper was rejected.
Yeah.
Because if I remember when I went to uni and the color of the papers that the professor was using, I think angel investing had not made into the curriculum at that point.
Yeah.
And so unless you had a very forward-looking, faculty member, that's the only way they would have something like this. But seriously, I think looking at the continent specifically, we need to do much more research, our own research on angel investing.
Good.
Right? And this is just simple things, right? We could have much more data.
Yes.
Right, in terms of transactions which are taking place.
Yeah.
Right now, while I mentioned the different platforms that I spoke about earlier, they're not getting to the specific countries and the kind of transactions which are being done at that point. I've had a look at some of the data that comes from the West, where they tell you on average how long does it take for a startup to raise funding.
Yes.
Yeah. And they tell you that it's between this amount. That's the data we're relying on.
Yeah.
It tells you that, if you look at specific sectors, what's the success that startups enjoy in those sectors, which would promote angel investing to a certain extent? How much is the average amount of transaction amount that angel investors are making in specific segments? We don't have that kind of data. So academia has a lot of work to do in terms of that.
Yeah.
And just contextualizing angel investing for our local markets.
Brilliant.
Because we're using a lot of templates from the West.
Yeah.
Like if you look at some of the evaluation methodologies, like the Bacchus method, where they take sort of like 5 key variables. They say that we'll allocate each of them maybe a worth of $200,000, and we'll know that then we'll rank the entrepreneur on that basis, and then we figure out whether they're going to be 50% of the $200,000 that's been allocated for team, for market, etc. We've not contextualized those things for a market.
Yes.
So it's very difficult. So academia has a lot of work to do in terms of doing that. I think I spoke about the government earlier.
Yes.
And just what they can do from a regulation perspective, legislation to support, incentivize angel investors. And I think there's a couple of startup acts. Kenya is working on their own startup act. I think we've had countries like Nigeria already have a very good startup act. I think Rwanda, etc. So it's coming, right?
Yeah.
So I think there's a lot of work to be done there. I think service providers also, just understanding early stage investing, lawyers, accountants, and pricing things right for startups and for angel investors.
Yeah. Because
at times when you tell a lawyer to do for you a due diligence for a startup, assuming you want to do one, the kind of quote they give you at times is, is like they're doing the same thing for a big sort of like organization.
Yeah.
So some of those things, I think we need to upscale our transaction advisor. And one advice I would give to startups is, and I'll just use a lawyer as an example. A lawyer is not a lawyer, is not a lawyer.
Yes.
Right. And what I mean by that is that at times people just imagine because someone who's a lawyer in your family.
Yes.
That's the person you should call for your transaction. But at times, what they do is conveyancing transactions, land transactions.
Yeah.
And so when you bring them to do a startup transaction, they can't support you in that. So we need to upscale our lawyers. We need to make the right choices when you're hiring some of these experts. So I think there's a whole big thing that could be done there. I think with incubators and accelerators, there's a lot of collaboration with angel networks. I think it's just to strengthen those much more and to ensure that, then they are showing those deals.
Okay. So, Steve, as we go, I'm curious to hear from you. What advice would you have for an aspiring angel investor?
Mm-hmm. Yeah, a couple of things.
Yes.
I've actually thought about this question quite a bit. And the Africa Angel Africa Angel Academy.
Yes.
We have this specific, I think it was an info session that we did for new angels.
Yes.
And we spoke about the 10 mistakes to avoid as an angel investor. I would highly encourage it. It's on YouTube and so forth. If you just look for Africa Angel Academy, you'll find it there. But to your question, I would say, number one, if you want to start as an angel investor, please start by investing in groups.
Okay.
Right? Because if you're going to do it by yourself, you can get it wrong.
Yes.
And if you get it wrong, I spoke about, how risky it can be, especially with when you don't have the right kind of training. I would say that's one. Two, I would say if you can get education, on angel investing or on early stage investing, please do, because that helps a lot, right? It helps a lot because then you know how to have that kind of conversation, how to optimize your portfolio and so forth. And I should go back to the first point of investing with other people.
Yeah.
Let's speak about syndication at this point.
Yes.
Right? You see, the advantage of investing in groups is that number one, the quality of the deal flow that you get is very different because everybody has their own networks and everybody will bring in different angel deals. Number two, in an angel group that people have different experiences, technically, level of experience and so forth, you find that they also bring in different angles when you're evaluating a deal. So if you're listening, someone, I spoke about a deal that we looked at some point, was a deal that was looking to work with petrol stations, to automate petrol stations. And what was so fortunate for us, it was brought by someone who used to work for one of the oil marketers.
Yeah.
And so any questions that would be asked, when the startup was pitching, we had someone who could,
a sector expert.
Yes, a sector expert to answer some of those questions. So I think you get a lot of that. So the due diligence side of things, the deal origination side of things, the kind of deals that you're receiving, the angels are supporting with that. And then if you're not an experienced angel investor, you want to ride on the shoulders of people who've done it before. So you can learn. Yeah, you can see someone else how they do the deal. You can ask, why is this happening, etc. And that then supports you. So that when you're doing your next deal, then you're very clear from that perspective. So I would say syndicate. I would say get some education, some training in this case that will support you on the angel investing journey. And I would say before you start, spend some time. Just incubators, accelerators are looking for coaches and mentors.
Yes.
Right. That's how I started. And
good.
You just listen to pitches for free, and you learn. Yeah. Right. You give your feedback, and then it gives you a good sense of what do you want to invest in, what don't you want to invest in. Why is this good founder? Why is this founder a good founder? The other one is not a good founder.
Yeah.
Why is this a better market analysis than compared to the other one? So just spending a bit of time just out of interest. And usually, if you have a lot of work experience, people will have you as a judge in a panel to coach their startups and so forth. So you can get started from that perspective. Then start with small amounts, 5 to 10% of your total net worth, excluding your residential house. Right? That's what we advocate you start with. Don't put in too much. Put in only what you can afford to lose.
Angel investing is not gambling.
It's not gambling. No, it's not gambling.
Thank you very much, Steve. We really, really appreciate your time today. And all the best. Where can people find you if they want to join the angel investment networks?
So if you want to find myself, my email is stephengugu@victoria.co.ke. Our angel network is VBAN, Victoria Business Angels Network. So you can Google that. Our website is vban.africa. And if you sort of get to the website, you can reach out to us directly, even for startups.
Yes.
If you go to vban.africa and you're looking to raise funding, you can just directly click, and it will take you to the page where you can be able to upload your application. We're active on LinkedIn, on the socials. We're active on Twitter also. So,
Thank you very much.
Asante sana.
Asante.
I appreciate it.
Yeah.
Yeah.